This was a week when a lot of the market trends we've been talking about for a while seem finally to have come to a head. Critical moments came with the publication of non-farm payrolls data for the US on Friday. That was one of the very best reports in many years, without hyperbole. We've now had an unbroken streak of 50 months of expanding payrolls. That's the longest on record ever. We've even seen average earnings beginning to tick upwards, which is exactly what many people out there in the beleaguered real world of the US wanted to hear. What's interesting is the effect it's had on the market. The S&P is still very close to its record, was broadly flat on the news. Meanwhile, the dollar on a trade-weighted basis broke through to its highest level since 2006, stronger than at any point when it was acting as a safe haven during the crisis. A very significant development showing how strong the dollar is, and perhaps most interestingly, if you take a look here at the 2-year bond yield, it's broken through to its highest level since early 2011, a very dramatic rise, indicating that traders think, I suspect probably correctly, that this really has tipped the balance towards the Federal Reserve raising rates sooner rather than later. Now, the last really big event of the year that we can see coming for markets, at any rate, will be in the week before Christmas, when the Federal Reserve meets on monetary policy. I think it's almost universally expected at this point that they will be changing their language about expecting to leave rates as low as they are for a significant period. I think the consensus would now be that we're looking for relatively early in 2015 for the first rate rise, rather than somewhere during the middle of the year. Now, what are the knock-on effects elsewhere in the world? It's very noticeable. You've seen sharp falls against the dollar by quite a number of currencies we're not used to talking about that much. The Mexican peso, the Israeli shekel, so obviously the Russian ruble has been falling very badly for a long time. The yen has now dropped below 120 to the dollar, and that might have an interesting effect on China. The total depreciation of the yen against the Chinese yuan in the 2 years of Apponomics is now well over 30%. However, there has been a very intriguing development in China. This is the Shanghai Composite Index for the year. You can see a very dramatic rally in the last few weeks. That's driven partly by the Shanghai-Hong Kong Connect, the sense that the market is opening a bit further. It's driven by the People's Bank of China's decision to ease, by speculation that there will be more easing in the reserve ratios for banks, a general sense that the Chinese authorities have got to the point where they've decided they need to prime the pump with monetary easing once more. Now, let's put that into some perspective. If we take a look at this chart of the Shanghai going back to its bubble in 2007, you can see this is still broadly consistent with what you often get after that severe bubble, that markets basically go sideways even if they lurch with some volatility for many years afterwards. It could well be dismissed as nothing more than that. The other big reason for caution is the Chinese economy's growth rate is slowing quite markedly. Its competitiveness is deteriorating quite badly thanks to the yen. All of those things seem to be a little inconsistent with getting extremely bullish about their stock market, unless you think the Chinese authorities will start deliberately weakening their currency. If they did so, and obviously they have the power to do so, that would be a very intriguing development, to put it mildly. You could even call that a currency war if it happens. Anyway, that is the main point at the moment. The strength of the US economy compared to the rest of the developed world has now reached a point where the dollar has superseded all of its previous crisis highs, where the bond market is unambiguously expecting rate hikes fairly soon. We will now see what kind of a fallout that has elsewhere in the world.